Seritage reported earnings a couple of weeks ago, and this was a massive report for me. They blew away my expectations, and I was very happy with what I saw in this report. Now, a review of what my thesis is here is that the only thing that really matters is paying the debt down to $800 million. So therefore, the only thing that matters is that they sell properties very quickly. Now, I know we had that big announcement, let's say a month ago, where the company basically said they want to sell the whole company, they want to liquidate everything. But what I'm going to do is I'm going to keep going with my current thesis because that vote hasn't happened yet, so we're not 100% sure that that's going to get approved. I suspect it's probably going to be approved, but I'm going to do this from a safety perspective because the only thing the company actually needs to do here is to pay Warren his money and get that debt down to $800 million by next July. Everything else is optional for them. They can continue to develop properties, they can sell the whole company, they can sell part of the company, and they're free to make that decision. They can vote, we'll vote on it, and maybe we'll go down one of those paths. But the only thing it's actual requirement here is to pay the debt down. So the only thing I was really looking at here in the earnings was the amount of sales that they had. Now, as of last earnings, they said they were putting $750 million up for sale. And that would have been enough to probably get them through the whole year and a quarter, fund their cash flow needs, and pay the debt down to $800 million. So that's what I was tracking. I was looking at, hopefully they're going to get at least $150 million in sales in this quarter to keep them on pace for that, because they need $150 million times 5 quarters gets you to $750. So that was my figure I was looking for. Now, what did they actually do? Well, they had $163 million in sales in the quarter. They had $102 million after the quarter ended, between then and the reporting date. And they also have $260 million that are in the process of finalizing as well. So that's a total of $525 million. If all of those go through, that's over $500 million in sales in less than 2 quarters, or let's say 2 quarters. So that is massive. I'm really happy about that. They did pay down $100 million on the debt. I assume that number is going to go up pretty shortly here because all this excess cash flow, I think a lot of it's going to end up going towards the debt. And in addition to that, as you probably know as well, but they're also in the process of selling another $1.2 billion in sales, bringing those to market or currently marketing them. I did see the Dallas property go up for sale, I think last week. So it does look like they're in the process of getting most of their stuff on the market. Now, I was a bit sad to see the Dallas property go up. I was hoping there was an off chance that they might decide to, we'll just keep Dallas and we'll keep Aventura and then we'll develop those. I thought that might be the most lucrative way to go, but it looks like they put that one up for sale as well. And with all this in mind, I think that the chance of paying down the debt to the minimum level that they need to get to looks extremely high. And so I think this company has been very much de-risked between the last quarter and this quarter. In terms of de-risking as well, you probably know the litigation with Sears is over as well. I was actually worried about this one because it was one of the only risks that I saw that was nuclear, right? They could have actually got really hammered by this lawsuit, even though there was a very small chance. It's still, it was a big amount Sears was looking for, and they ended up settling for $35 million. It looks like, this is a huge win as well. So from the angle of asset sales and potential debt repayment that we're going to see in the next few months, I think, and the litigation being over, I think the risk on this company is considerably lower than it was. And that's part of the reason we've seen the move up in price. Okay, and one other thing I've been looking at is the gain on the sale of their assets. So that kind of gives us an idea of, maybe how much they are getting for their properties versus the book value that's recorded on the balance sheet. Now, for anybody who doesn't know, real estate is recorded at cost on the balance sheet. So any of these properties that Seritage would have got from Sears, these are recorded at the original cost plus some depreciation. So in the US and a lot of other countries too, we don't write up assets on the balance sheet. So stuff like this will just stay at cost, and then when it gets sold for a higher price, then that's booked as a gain on the income statement. So if we look at the gain here this quarter, it looks like they're about a 71% increase versus the book value. They made $68 million more than was recorded on the balance sheet. So just as a kind of a ballpark, trying to get an estimation of what the company's worth, this is another maybe way to gauge it, like give it a shot in the dark. But previous quarters actually were more like 100% gain. The last two quarters that I looked at, and that might be due to a few things, right? It could be that they're getting, they're trying to unload properties, so they're cutting their prices to move them quicker, or it could mean that they're just not comparable. The sales are just not comparable because they would have had different cost bases, different properties. Maybe some of the cost bases are closer to market value, like the ones they sold this quarter versus last quarter. So it depends on the individual property and what the cost base was. But if we do a quick calculation here, if we look at the balance sheet, there is about $1.4 billion in real estate investment, and if we add 70% to that, we get $2.39 billion. And if that was more like a realistic valuation of the book, then what the equity would look like is it would move to $1.6 billion. So if that were true, that implies about 77%. Yeah, 77% upside from here, based on the current market price, and that would put us in the $22 range. So moving forward, I'm going to keep looking at this stat. I think it's quite, it gives a bit of an insight into how the sales are going. But I'm not going to put a huge amount of emphasis on that valuation that it's worth $22. But I think any way you cut this valuation, use different methods. You can look at other YouTube videos by Tom and Brad. They've done some good work on it. Matt Peterson has some really good valuations as well. I don't see a realistic path to this landing below $20 as a net result here if they actually liquidated the whole thing. Maybe the low end from Seritage was $18 last time they talked about it. I think the upper end was $30. So I'm pretty content to hold this and wait for a better price because I think it's extremely de-risked now. I'm very happy with how that report went, and I feel really a lot more comfortable just holding Seritage and just waiting this out. And a final note, if anybody's still watching, look, I got a microphone. I felt sorry for everyone watching my videos with that echoey, terrible computer stock microphone that I had before. So if if you notice the difference, let me know. Or if not, I got to change the settings somehow. So I think that's it for now. I hope you guys enjoyed that, and I will see you in the next video. Thanks.